All right. Good afternoon, everybody. My name is Jordan Walker. I'm going to give it probably about another minute or so. I still see people coming in. Hope everyone's doing well. If somebody could in the chat box, if you can hear me, throw a quick note up there just to make sure. I want to make sure you guys can hear me. So somebody give me a thumbs up or raise the hand or something to let me know that you can hear me. We'll wait. Perfect. Thanks, Brandon. Thanks, Mark. Yeah, we'll wait a couple minutes, let some people join, and then we'll get going. Thanks for joining us today, and we'll get started shortly. Thanks. All right, so let's go ahead and get started. For those that I haven't had the chance to meet with or speak with before, my name is Jordan Walker. I'm the manager of business insurance solutions here at Lincoln. Once again, thanks for joining us today. I'm excited about this topic. We're going to stay fairly high level today, but what I hope to do is share with you a couple of things that would be helpful for you in the business planning marketplace. So, just to define business insurance really quickly, when we talk about business insurance from a Lincoln standpoint, we're talking about, at least in my area, utilizing retail life insurance to meet a host of different business needs, right? So, what does that look like? Very simply put, we defined it in three key areas in the retail market, meaning using insurance that anyone, IUL, VUL, anyone on the street would purchase, right? So we've got, of course, key man protection opportunities, right? And we'll talk a little bit about that in on some side conversation throughout today. But key man protection opportunities, buy sell funding opportunities, and also executive benefit planning opportunities. So when you think about the risk that's present for business owners, and of course, I think especially from a mortality and morbidity standpoint through 2020, these risks have really risen to the top. But when you think about risk in the business setting that business owners typically aren't aware of, it's in those three key areas, right? Protecting the business from death of a key person, making sure that their buy sell is funded and executed properly with life insurance, and also retaining top talent, i.e., using executive benefit plan solutions. One thing I'll hit on really quickly from a Lincoln perspective, with regard to key person protection, I'm not going to talk too specific about it today, but what I will say is that we are incredibly competitive there in that particular market. We will, in some cases, issue up to 20 times income as a key man multiple. So usually when we're deciding how much death benefit we need for a key person, it's a multiple of income. In this particular case, at Lincoln, if properly financially justified, we will allow for up to 20 times. Also, you may run into situations where there may be a private equity type arrangement, right? And when we think about private equity deals, we think about large private equity deals, but the private equity market is small, medium, and large. A lot of times, what will happen is private equity companies go in, they buy a business with the intent of growing it, improving it, and selling it, but they need key person protection on the individuals that they've invested in and the business they've invested in. So traditionally, insurance carriers haven't been comfortable with that arrangement, but I'm happy to report that Lincoln, in a lot of cases, for private equity type arrangements where that private equity company needs key man on a key player within the business, we will issue up to 50% of that investment. So if $1 million goes in, we could do 500,000 as the key person. So just some competitive niches there. But what I want to talk to you about today is something that I feel is ahead of the curve in terms of a conversation right now, and that's executive benefit planning. And you may think, why would we be talking about executive benefit planning right now when businesses are simply just trying to keep the doors open? Well, first and foremost, and I'm actually going to read this to you because I think it's important. This week, I've asked some of our top customers why it is that they feel it's important to get ahead of the executive benefit planning conversation. I'll read you some top three answers that I got. First and foremost, let's make sure I got this right here. They want to get ahead of the curve with recoveries, right? So we all know that at some point we will come out of this pandemic environment where business has been different. They want to begin to have conversations with their clients, their advisors, with regard to solutions that'll be important to have in place on the other side of that recovery. So that was the reason number one. Reason number two, we call it here at Lincoln the attitude of gratitude. But reason number two is simply to show gratitude. A lot of businesses are very grateful for the people that stayed with them, remained with them, and they simply want to reward them. right? And also incentivize them to stay with the business to retirement. So that's the second reason that I got from an advisor this week with regard to why they're talking about executive benefit plans. And the third reason I think is, it's important, and I see it personally. I come from a family that's got a lot of businesses. How I ended up in the life insurance business, I don't know, but I get to see this firsthand, and I'll read it to you. This is heightened concerns of key employee mortality, morbidity, and their financial well-being. Right. So when you think about executive benefit plans, a lot of the times we can address a mortality concern, a morbidity concern with maybe something like an LTC contract or LTC rider. And then you also have this whole notion of financial stability. And life insurance isn't the only asset you could use in this category, but it's certainly one that key employees can lean on to help them down the road supplement their retirement. So I want to start there and talk about the importance of retirement supplements and how, from a business insurance standpoint, we can begin to have conversations around this and help key employees really save efficiently for retirement. And I'll help paint a picture with a couple of illustrations here on how we do that. And then I'll close out and talk more specifically about some of the things that we're doing here at Lincoln with our life comp administration platform to help support you day 2, year 2, and year 10 and beyond when it comes to administering some of these more complex plan designs. So with that said, give me a second here. I'm going to try to share my screen. Here we go. Perfect. So let's talk a little bit about retirement income planning for businesses. And I'm going to look down ever so often just to check time here, so forgive me. But what's important to note that, for key employees and for business owners, and by key employee, I'm really defining these individuals as highly compensated. For business owners, of course, the owners of these firms. What's important is that typically they need extra ways to save for retirement. And from a key employee standpoint, they likely, in a lot of cases, want incentive to remain with the business. So focusing on retirement income supplementation and planning is actually a great way to offer some solutions to them. And I'll walk you through. I'll start with the who is a good fit for these solutions, talk about why life insurance, as well as how we do it. So when we talk about in the business setting, the best target profiles to talk about executive benefit plans or supplemental retirement plans, I'll give you 2 targets. And most of you guys know this, but it's good to talk about. First and foremost, we want businesses that are established with stable cash flow. Understand that's a concern coming off of 2020, but things are beginning to normalize a little bit. And then we need businesses and leadership within those businesses that you work with that desire to retain top talent, right? So the best picture from a business profile is one that's stable and one that has a desire to retain top talent. You will be shocked to know, and I'm sure many of you have seen this, but just because a business is successful doesn't necessarily mean that they want to retain their top talent. And so we need to just make sure we're asking questions around that. If you start to see these types of things from a cash flow standpoint, either from having conversations or looking at their financials or talking to the owners really about their desire to retain top talent. If you see those 2 things present, great target for executive benefit plans that focus on supplemental retirement income. So let's talk about the individuals within those businesses. First and foremost, we're looking for people from an age range standpoint that are under 55 and highly compensated. With regard to key employees, the reason why I go after that 55 and below mark is simple, right? So from a life insurance standpoint, you of course have cost of insurance. Once you get above a certain threshold, from the numbers, it almost appears as if, and it's true, that cost of insurance does exceed the cost of paying tax on an investment, right? So the closer you get to 55, the less impactful a supplemental retirement plan using life insurance can be for a key employee. For business owners, same thing, high income earners under 55. I'll get to the tax structures that you want to look for here in a second. But that's basically it. Under 55 typically are going to be a good fit for these solutions. So why life insurance? This is a great way, and this is by no means drawn to scale, but this is a great way to just show individuals what the retirement income gap really means and looks like. So on the left side, if you can imagine, I've got a scale here that shows the percent of income replaced in retirement. And at the bottom, I've got an individual's income. Okay. The red here that's filled into the chart would represent traditional retirement savings methods, right? Social Security, you've got qualified accounts. But what you'll notice is, and many of you know this, as an individual makes more money, right? The higher they are on that scale of money, the less they can utilize traditional retirement plans, qualified accounts, Social Security to meet or get anywhere close to what they were making in their working years, which is represented by 100% on the left side. So life insurance can literally fill that gap for them. But the question becomes, if we want to use life insurance in the business setting to help fill the gaps for owners or employees, what are our options and how do we do it? So I'll walk you through this utilizing what I consider to be really the foundation of business planning, which is business structures. Okay, so to understand what solutions may be a good fit, we have to understand how a business is organized. So let's talk really quickly about solutions for key employees. So key employees have no ownership, right? They're just employees of the firm. So regardless if a business is a C Corp or an S Corp, or we'll say more simply a pass-through entity, they can benefit from strategies like executive bonus arrangements, loan regime split dollar, or non-qualified deferred compensation. So on a scale from easy to hard, or from, I'll say it this way, on a scale from control to no control, the executive bonus plan is going to be a great strategy. It doesn't offer a lot of control to the business. A non-qualified deferred compensation plan would be the maximum amount of control you could get for an executive benefit plan. And then you've got something like loan regime split dollar that fits dead in the middle, right? So all of these utilize life insurance in some way. And what I mean by that is from an executive bonus plan standpoint, the insurance, and I'll walk through an example of this in a second, the insurance is driving the benefit there. But if you compare that to a non-qualified deferred compensation plan, what you basically have there is a promise to pay a retirement benefit. You may or may not use life insurance to do that. As we know, as insurance professionals, life insurance is one of the most efficient ways to save because of the tax favorability. So that's solutions for key employees. Let's talk about solutions for the business owner. So if the business owner wants to partake in some type of supplemental retirement plan and they are the owner of a pass-through entity, it makes a whole lot of sense to just talk about a basic, what we call SRP with them, right? A supplemental retirement plan that's funded with their after-tax dollars, right? So for a pass-through owner, there is no separation between their personal wallet and their business wallet. It's all the same. It flows through. But if that owner is the owner of a C Corp, you have all of the options available to you that you would a key employee if you weren't an owner. So the C Corp is a separate entity from the individual, separate living, breathing entity. I could do a bonus plan, split dollar plan, or non-qualified deferred compensation plan. All of them have various benefits. I'm not going to talk about this today in detail, but what I will tell you is that we have seen a boom recently with regard to loan regime split dollar. You've got a C Corp rate that's 21%. Most successful C Corp owners are making good money. Their personal tax brackets are at 37 plus 40%, we'll say. And so if you can imagine, their firm earns money, they got to pay 21% on it, right? And then when they go to pay the owner out of the C Corp, then the owner's double taxed on that. And they're paying almost 40% if they're a high income earner. So why not consider a strategy where you could loan money out where it's not considered compensation and is more likely taxed? That's why you're seeing a lot of loan regime right now. But what I want to focus on actually is a much more simple solution today. One that I believe, once again, based on the feedback we're getting from advisors, is one that's a great method, or at the very least, a door opener to have conversations about business planning and executive benefit planning. And that's the executive bonus arrangement. Bonus arrangements are extremely simple, right? They're easy. All you have here is a situation in which a key employee or an owner, if it's a C Corp, they would own a contract personally, name a beneficiary of that contract, and the business is going to fund that contract for them via providing them compensation each year. So this is one of the only scenarios that you're going to see where you can, quote, deduct a premium payment. And the reason why that is because we're not, the business doesn't own the contract. Of course, we know we can't take a deduction when the business owns it. We're simply compensating the key employee and they're owning that contract. I would say 90% of these sales opportunities are going to be supplemental retirement planning focused, meaning How much money can I put in? Making this very simple. How much money can I get out if structured properly, income tax free? You will find opportunities, however, if I go back to that client profile, 55 and older, where maybe it doesn't make sense from a supplemental retirement planning standpoint, but maybe they have gaps in their death benefit coverage. You can still do some type of death benefit focus, either with like one of our guaranteed VULs, VUL1 or GULs. You can do more of a death benefit focus with them. But once again, the majority of these sales are supplemental retirement planning focused. So that's it, right? Executive bonus plans. I want to talk a little bit about it. But what I want to do is give you all a different context around it that we actually saw as a gap in the market from a need standpoint. And we started to create some material and support for you to be more successful in this market. So I'm going to stop sharing this really quickly and bring up a really great solution that we call the Lincoln Rewards Plus program. So just give me a second. All right. So let's talk about Lincoln Rewards Plus. What is it? While it comes up, what is this? What this is a combination of three things. You've got a really powerful, easy to communicate solution in an executive bonus plan. You've got powerful accumulation products offered through Lincoln. So that's both our Asset Edge Exec, Asset Edge Exec, as well as our Wealth Accumulate IOL. Got a little thrown off there. And so our accumulation product suite is deep. We've got various options, some familiarity with regard to the fund lineups that we offer from a client standpoint. I'll get to why that's important here in a second. But just know that we have very robust products to support this solution. And in addition to that, like I said earlier, day 2, year 2, or year 20, we have a really robust administration system that makes not only communicating with your customers more efficient, but helps them make sure that they're properly accounting for their plan. And so I want to get into this a little bit, what this executive bonus plan really, this Rewards Plus executive bonus plan really is about. Once again, executive bonus plans are great. When you think about the target profile of, like I talked about, the 55 and younger individual that's highly compensated, these individuals typically, and this is a very North Carolina-ism, I'm from North Carolina, so I talk in North Carolina-ism sometimes. These individuals typically have no other place to put their money but under their mattress, right? And hope that it grows overnight. Highly compensated, maxed out 401ks, looking for other assets to put their money into. And with regard to the executive bonus plan, it's great for them because it focuses on that supplemental retirement planning element, but also on the flip side for the business, they can take a deduction for the premium. So it works for both. And then with our product combinations, it really does bring things together really cool. So what we've done here is created a step-by-step sales guide to help individuals like yourselves sell more executive bonus plans, right? And what I'll do is walk you through this guide. If you want to know how to get to this, it's simple. It's www.lfg.com/Lincoln Rewards Plus. It'll take you straight here. But what we've done, it really is we took a simple solution and wrapped around it support for you to be more successful. So you'll hear us talk a lot at Lincoln about the 4 key steps in the business insurance sales process, starting with identification, design, implementation, and administering the case. Let's talk about identification and what we've done here really quickly. If I can get it to come up. The internet's running a bit slow. So from an identification standpoint, we have really worked hard to make sure that you're aware of who the target businesses are for this type of solution. I walked through them briefly earlier, but we go into a lot more detail with regard to who they are, where to find them, and what's important with regard to questions you should ask them, right? There's a video recorded by one of my consultants that you can watch. It's great, quick, and short. But we also at the bottom here provide you with key questions, and Michael in his video provides other questions as well that you want to ask. But I think from an identification standpoint, it goes a lot broader than that with regard to things you should do as the insurance professional to make sure that your clients know that you specialize in this market. And so what we've done is armed you all with a couple of the key things that I think are important. One, sample prospecting letters or client communication letters. So if you want to be able to, promote the fact that you can offer expertise in conjunction with a link in about executive bonus plans for your business owners, top clients, or top employees. We've got letters that you can either send via email or snail mail, if that's your thing, to them to help promote that particular opportunity. So that's here at the bottom here in additional action items. Also big right now, I understand it's a crowded space, but it's one of those things where you have to be present just like everybody else is. But it's social media, right? What are you doing to promote your expertise from a social media standpoint? So if you like the executive bonus plan, but want to broaden your reach with regard to who you're targeting, we can help set up a social campaign for you to run through, let's say a LinkedIn. We've got 10 or 15 really great posts that you can put up. And our consultants can help you kind of tailor that and curate those posts for you and give you some advice as to when is a good time to send them out. So once again, thinking a lot broader than just arming you with who these people are and how to have a conversation, but trying to help brand you in the market and help business owners understand what the risk is of losing a key employee and how you could help. In addition to that, we've got some client approved videos you can send out. We actually hired some actors to record a couple of videos for us. And then all of our collateral in the resources section here on how the plans work, executive benefit fact finders for you, all of that good stuff. And so that's the identification stage. And once again, I'll summarize this by saying a lot of good resources, a lot of good support for you, and support that brand you in the market. So in the design phase, one of the things that we've done here is really walk through key considerations that you should be aware of with regard to how to design your executive bonus plan. So I think the mistake that we all make is that, we see one executive bonus plan, we think it's the same for every case, and that's certainly not the case, no pun intended. And so at the end of the day, there's certain considerations that I think that people need to be aware of. And what we've done is helped step by step walk you through from a case design standpoint what you should be aware of. So gathering the right client detail, right? Choosing the right product solution. You've got some really, once again, strong product options with regard to SRP, supplemental retirement planning from a Lincoln standpoint. Asset Edge Exec, which is a business insurance focused VUL. And then if you sell IUL, you've got a great story with the Wealth Accumulate. I will call out the fact that we do have a new account within that product, the Fidelity AIM account. It is a vol control index strategy. And the great thing about it is not only is it a somewhat conservative way to have a conversation about how to allocate the contract, but when you think about the sales process and executive benefit plan sales process, not only do we have to convince the business owner that it's a good idea, we then have to convince the insured, the key employee, why it's a good idea. And sometimes having something that's familiar to them, like a Fidelity, which they probably have available to them in their personal retirement qualified plan accounts, can help move that sale forward. So don't want to go into much detail about the product. Just know that when you do look at it, you contact us. Let's have a conversation about that Fidelity AIM account because it's something that could be a benefit to you. But then we go into key things about running the illustration. And this is really where my team comes into play. We really want to help you design these cases tailor-made to help with the nuance that exists. Once again, not every case is going to look the same. So I've got a great team on the business insurance side here at Lincoln that can help you design these cases. And not only that, help you prepare for the meetings, right? The key to success with this is not only knowing how to communicate it, but just knowing the nuance of what the sale looks like at the table. I will tell you that our biggest thing is that we like to help you prep, right? We have a lot of advisors that role play with us. Hey, I'm going to say this. How will this land in the meeting? We'll go back and forth with a couple of things, but long story short, however we can support you, we're willing to do it. Lean on us for that. And what I'll call out last in this design phase is we've got really strong executive underwriting programs. First and foremost, when you're working with groups of 5 or more individuals, that's a great opportunity to introduce simplified issue into the equation, right? So we have found that the success, especially with executive bonus plans, is with making the opportunity feel like more of a transaction for a business. So if you're dealing with 5 insureds or more, we could get in on a simplified issue basis. If we're dealing with 10 or more insureds, we could do this deal on a guaranteed issue basis. We have gone through some tremendous, awesome updates with regard to our guaranteed issue program. Just know that for groups of 10 now, just to give you some quick math, on a group of 10 for a SRP focused plan design, in certain situations, we can offer up to $600,000 of face per person. You probably don't need that type of capacity, but just showing you that that's very competitive. Our old multiples would only get you to about $250,000. So that's important to note. But yeah, you've got that. And then you've got the Professional Advantage program. I see this working more in the executive bonus arena arrangement arena for highly compensated business owners. The professional advantage underwriting program is when you've had an executive physical within the last 18 months. We will and can, in a lot of cases, issue up to $20 million of face without any medical underwriting. So they would have had to have had an executive physical. That's essentially a very specific type of workup. If you want more information, we can send it to you. But once again, this is just another opportunity to make the deal feel like more of a transaction than the life insurance process as we traditionally know it. So a couple of more things before I wrap up. And if you have any questions, feel free to drop them in the chat box. I'm more than glad to do that, answer those questions. Let's talk about implementation. So one of the things that we do at Lincoln is we provide plan documents when needed. And I'll talk about what the system is. I'm doing a little bit backwards. I'll talk about what the system is here in a second. But under the executive bonus arrangement, if there's any restrictions that the employer wants to put in on that contract, in some ways we can support that at Lincoln. So let me define what we can't do first before I define what we can do. What we can't do is administer what we consider to be a traditional restricted executive bonus arrangement, which is what we call in short a REBA, right? That typically involves some type of repayment of the bonus should you leave the business early. That's not something that we do at Lincoln. What we do offer, though, is what we call a modification of, ownership rights of the contract. So in the case where you want to offer the bonus plan to a top key employee and you're afraid that they may dip into the policy early to take cash or they may make some changes other than beneficiary, we do require, if you use our plan document, that the employer provide sign off on those changes. Why is that important? It's important because it can give sometimes the employer a window into things that the key employee may be doing, i.e., one of those considering leaving the business. So we put some stop losses, if you will, in there in terms of being able to make changes. Typically, you're not going to run these restrictions that we offer very long, maybe 5 to 7 years, but it's one of those things that is a safeguard to help protect the business. Now, if you have a conversation with a business owner and they decide that, hey, these restrictions aren't really what I need something a little bit better than this, then you may want to graduate this sale to split dollar or to deferred compensation, which would offer more protection for the business. But at any rate, let's say you've identified a good opportunity, you've designed the case, you're ready to implement it. It's deal closing time, right? You've gotten the premium, you're ready to put it in force. We offer, once again, plain documents to support this plan, but also just based on questions we've been getting for years, we provide step-by-step guidance for you with regard to how you fill out the paperwork, right? You cannot say enough. I cannot say enough about this. It's one thing to march somebody through a process. It's another thing to do it right. And we want to make sure you do it right the first time because the back and forth with insurance, as we know, it can get a little bit crazy. So we walk you through how to set up the paperwork. In closing, let me talk a little bit about really the stickiness and the glue of all of this, why I think you should consider not only executive bonus plans as an opportunity, but selling them through Lincoln. We have at Lincoln and have for years had a third-party administrator that's in-house called LifeComp. And simply put, what LifeComp does is it provides post-sale plan administration, accounting reports, and year-end reports. And so with regard to executive bonus arrangements, we will actually send them a modal accounting memorandum that reminds them what to expense for that particular pay cycle or at the end of the year if they do it as a traditional bonus on their books. This may seem like it's something for a bookkeeper or a CPA to keep up with, but at the end of the day, taking that burden off of the business owner or the CPA to make sure to remember to record the premium for the bonus as an expense and providing that to them each month or modally is something that they're really like. In addition to that, one of the things that's important that I'll note is the systems at Lincoln are connected. The policy mainframe systems are connected to my admin system or the LifeComp system. So let's say a premium changes and they forgot. They were supposed to pay 10, they paid 5 because of a COVID-like situation. Let's say they didn't have enough money to pay the premium, but wanted to pay something. In the traditional sense, it will be hard to catch that change or remember. Our systems know, hey, you were supposed to pay 10, you paid 5. We will automatically adjust all of the accounting for the bookkeeper and the CPA to support the plan. So once again, another one of those stop gaps that we've gotten forced to help administer the plan. And then, of course, we have year-end reports. So a lot of CPAs and bookkeepers record their bonuses at the end of the year. So we can provide an aggregated report A lot of our executive bonus plans don't have just one, but many on service. So we provide those reports. So, I look at this and say, why, once again, Lincoln, you've got the powerful products, but you also have the admin support. And from a life comp perspective, not only is it a great solution to support the business, but for you as the advisor, when you start to look at the ability to add on cases, once you establish one of these plans within a business, it's kind of like the gift that keeps on giving. We have a lot of advisors that add 10, 15, even 20 insurance to their contracts every year. We always say that they've worked really hard to establish an attitude of gratitude or culture of rewards in a business. And so when business owners bring on employees, they do their enrollment for their bonus plans, just like they do for their qualified accounts and for their other medical benefits. It's just a part of the culture in the business. So it's the gift that keeps on giving. And we help you keep up with that from a life comp perspective here at Lincoln. So in closing, because I'm right at time, what I'll say is that, business planning right now has definitely been difficult. This has been an interesting year, but I will say at the same time that a lot of businesses have done well. And for those that haven't done as well, they are really focused right now on major concerns from a mortality, morbidity, and financial strength standpoint for their key employees. And so why not begin to introduce conversations around not only business insurance planning, but executive benefit planning, utilizing a simple strategy like the executive bonus arrangement. And in addition to that, we have your back day 2, day 20, whatever that is, 20 years from now, with regard to servicing the plan, so that you can focus on the customer, the relationship. We can do all the heavy lifting for you on the back end. And so thank you so much. If you have any questions, I'm going to hang out here in the chat box. I hope everyone is doing well. If you want to reach out to us, it's business insurance solutions at LFD.com, business insurance solutions at LFD.com. We'll be more than glad to work with you, and we'll talk with you soon. Thank you.